Welcome to Late Night Stocks. Affirm stock is dropping more than 10% and PayPal is following that with 4% down daily. Will they keep dropping or is it buy the dip opportunity? I made actually detailed analysis for both stocks here, but let me update you with latest news and give some entry points. Let's start with PayPal stock. PayPal stock is now at $185 with $217 billion market cap. After seeing $306 all-time high in July 26, now we are dropped to $185. Will PayPal stock keep dropping or is it buy the dip opportunity? But why this drop of PayPal stock started in July? It was actually about exclusion from eBay. eBay replaced PayPal with another payment provider and ended 19-year partnership on June 1st. But what does this mean for PayPal stock? Will it hurt the revenues of PayPal? We need to know that why Wall Street is selling PayPal since July. One of the main reasons was eBay. eBay replaces PayPal with another payment provider ending 19-year partnership on 1st of June. And those times PayPal stock was also overbought due to pandemic conditions. But what does it mean for PayPal stock? Is eBay business big part of the revenue or not? If it was 5 years ago, I would say yes, but for now, no. 5 years ago, eBay marketplace was 17% of the whole revenue, but now it is only 4%. So there's not much things to worry. There's also very good news. I will come there in a minute. But why did eBay drop PayPal? That was actually mainly the customer data situation. When you buy something with PayPal, then you are directed to another page. eBay wanted to do everything in their homepage and not lose customer data while shopping. That's why they replaced PayPal and they partnered with Adyen. It's a Netherlands-based European company. They are also a public company with $27 stock price and $85 billion market cap. Looks like this company is also affected from payment stock sell-off like Visa. Looking at $85 billion market cap of Adyen, PayPal definitely deserves $250 billion market cap. Before mentioning entry points, let's check quickly the Q3 numbers. In the third quarter, they had 13% revenue growth and they had $1.11 earnings per share versus $1.07 expected. So they slightly beat the expectations. Regarding revenue, they had $6.18 billion versus $6.23 billion. So it was a slight miss, but the stock price fell dramatically afterward. What was the reason? The reason was fourth quarter outlook, not Q3 results. PayPal expects $6.9 billion versus $7.2 billion revenue. They also reduced the outlook in terms of EPS. They are expecting $1.12 per share versus $1.28. So they reduced their expectations and stock price down as well. Now you're asking, did we have always bad news? Of course, there are also good news. Let me show you. PayPal is teaming up with Amazon to enable customers in the US to pay with Venmo at checkout starting from 2022. So in 1 month, PayPal will start to get revenues from Amazon, which is huge. I think this was a really good move from the management. eBay dropped PayPal, but it was actually good for PayPal. Now they are partnered with Amazon. Maybe you don't know Venmo? Let me explain you shortly. Venmo is owned by PayPal and is part of PayPal's larger family of brands. You can also use Venmo to make purchases via mobile app, online or in person. Venmo has already 65 million users. But what is the difference between Venmo and PayPal? The main difference is PayPal is universal, Venmo is only for United States. But if you use Venmo, you have one advantage actually. PayPal charges 2.9% fee for personal debit card transactions, while personal debit card transactions are fee-free on Venmo. If we deep dive into Q3 earnings details, we can see that they are already generating revenue from buy now pay later business. Almost 10 million customers have used buy now pay later service and transaction volume was $5.4 billion. As you know, they also expanded their portfolio with Paidly in Japan. This company is also providing buy now pay later business. 70% of purchases in Japan are in cash. So they want to use this opportunity entering the market with buy now pay later services. When we continue with the active users of PayPal, they have now 416 million users, which is a 15% growth year over year. But if you look at the previous year, they had a growth around 20%. Now it is dropped to 15%. This can be worrying. And we can see the same thing in new active accounts. It is about 10 million users per quarter. With Amazon deal, Venmo will increase their active users, so does PayPal. Okay, they are steady and profitable company, but they don't grow their profits. It's always remain the same, and Q4 outlook also gives the same signal. If you look at the expectations for next quarter, we see that revenue grows slowly but steadily, but profitability remains around same. If we look the estimates yearly, we still see a strong growth in PayPal company. So what should we do? As a result, PayPal is growing e-commerce industry. They have a recurring revenue from Amazon and other transaction volumes. They didn't buy Pinterest, so they have plenty of cash. There is no problem with the revenues. They are buying new companies, extending their portfolio. Okay, they are not in a disruptive business, but who does? Most of the companies are basically doing the same in different names. They are providing this service, getting cut from this volume. With this Amazon deal, I think management made a really good job. That's why PayPal stock gets 8 out of 10. For 8, 9 rated stocks, you should definitely check our Fly Me to the Moon series. Okay, let's talk about the stock price. When I look at the stock price, PayPal stock is dropping like there's no tomorrow. So we made a double top at $308 at the end of July, then we keep dropping till here. Now the stock price is now at $186. We broke this 200 days average and came to July 2020 levels. Looking at the Fibonacci levels, I think we will stop around 170, 180 levels, then we will consolidate here. We already started seeing lockdowns in Europe, and I think United States will be the next. When we experience these lockdowns, then stock market can shift. Buy these stocks like PayPal, Disney. Let me know what you think in the comments. Would you buy the PayPal stock from here? Let's continue with Affirm stock. Affirm stock is now at $123, down 9%. In intraday, stock price saw $119, seeing all-time high on 5th of November with $176. Is this drop brings us an opportunity to buy? In my first Affirm video, when the stock price was $123, I said that we can continue in this bullish run. If it stays over $125, then we may go up to $150 levels. After seeing $175, then we had a huge pullback. There were actually two main reasons for that. One of them was this news that Affirm announces proposed private offering of $1.25 billion of convertible senior notes. In my previous video, I also said that we can have a shares offering because cash balance of Affirm was not that good. Balance sheet of Affirm is not convincing for me. They made $150 million loss last quarter and they have more debt than cash. There's also a risk that Affirm can sell some shares of the company to have some cash. I mean, you don't check our previous videos, so I brought them to you. Maybe you should subscribe to this channel so that you can have these warnings on time. Another reason was that insiders sold the Affirm stock. They sold about $25 million of stock in this quarter. So they already knew that it was overvalued. They waited until this hype ends. Okay, I was right. Let's continue with stock price and some entry points. What I ran in 2 months, they doubled the stock price in 2 months. Now they are dropping. Will it stop at $125 or what are the next steps? I think we may see a drop until $110. I don't know if I would buy from there because most of the payment providers have a positive cash flows that provides security for the stock. But from a firm point of view, I'm not sure. But if stock drops somehow to $84, I may consider buying it. Thank you for watching till the end. I hope you like it. Write down your comments, give a like, and don't forget to subscribe.